Welcome to Financial Issues, where we help you steward faithfully by honoring God with your investments. Now listen in as we give you the practical tools and advice you need to become a biblically responsible investor.
This is Financial Issues, where we help you defund darkness and fund the light by investing with biblical integrity. Wonderful to be here with you all. Seth Udinsky, Sam Case, and your host, Mark Manila. Mark, good morning, brother. Great to be here.
Good morning. Welcome, everyone. Glad to be here as well. Thank you for having me, and thank you for joining us today as we talk about everything financial from a biblical point of view.
And if you've got questions, folks, Mark has the answers. 610-363-1110. 610-363-1110. Get your call queued up right now. I know we had to close the phones yesterday. We had some folks trying to call in. So the phones are open now again, folks. If you tried to call yesterday,
we're just that popular.
That's right. Give us a call. 610-363-1110.
Yeah, we're not setting ourselves up for a fall here, are we?
Now's the time to call, though, folks. Mark, our audience, I love our audience, but our audience is notoriously second half of the show people. So everybody calls in the last segment. Call in right now. We want to get to you. 610-363-1110. On today's show, some interesting topics, fellas. What's the deal with silver? Well, we're bringing on a rather familiar voice to discuss this. I'm looking forward to this quite a lot. Also, we'll recap Christmas for the markets. Did Santa come in the form of the Santa rally? You'll have to find out and wait just a moment. Before all that, though, we saw this interesting report here, Sam. It was President Trump on Truth Social taking a stand for the regular home buyer, it seems. What can you tell us about this, Sam?
Well, yes, sir. So President Trump, he's planning to ban large institutional investors, big guys like BlackRock, from buying single-family homes, posting on Truth Social, quote, because of the record high inflation caused by Joe Biden and the Democrats, the American dream is increasingly out of reach for far too many people, especially younger Americans. And he says, for that reason and much more, that I am immediately taking steps to ban large institutional investors from buying more single-family homes. And he's calling on Congress to codify this, saying, quote, people live in homes, not corporations. Now, according to CNBC, just to give you an idea of what's going on here, investors own about 20% of the single-family homes in the country. Now, that sounds like a lot, and frankly, it is, but it also should be noted that the vast majority of those are not the big guys like BlackRock. These are mom-and-pop investors who own, 5 to 10 homes that they rent out as Airbnbs or whatever. As far as the big guys go, the guys with more than, say, 1,000 properties, they make up just 2% of the investor-owned homes. And actually, as of late, they've been selling more than they've been buying.
Mark, what do you think? Does the institutional investor really play a role in driving up these home prices?
What I liked about the story was how they separated individuals who are buying multiple homes and renting them out from institutionals that are buying homes and renting them out. I would say that you really shouldn't divide those apart. They're all the same type of thing. They're all businesses trying to own real estate and make money off of rent. And as such, they're taking 25% of the inventory off the market for people who want to own homes. I don't care if they're individuals or large corporations that are doing it. So let's put those back together. I think that does have an impact in the price of homes and because of the lack of inventory there is for people buying homes, especially entry-level homes, which is when they say the small investor, the individual investor, they're buying a lot of the smaller homes, the entry-level homes, and renting those out instead of them being on the market to be sold. I think it has an impact, but I don't think it's a bad idea, actually. If people want to do that, why not let them do that? There still should be inventory out there. So I don't think that's the biggest impact on the barrier to get into a home, if that makes sense. I think there's other things. For example, for the last few years, or especially during the Biden administration, high interest rates were a barrier where people were saying, oh my gosh, 8% to get a loan, nobody can afford to buy a home. Well, yeah, that's probably true, but 8% isn't that bad over my lifetime. I've seen them up to 17%. So, and the average was between 6 and 8%. But still, mortgages really not the issue today. Rates aren't cheap, but they're not high. But it does impact it because it's how much can you afford to pay monthly. I think the limited supply is the biggest thing. And I'd also say the limited supply is due to the inflation from the last administration. The inflation, the wages going up, the cost of construction materials, not doubling, but tripling. I remember I was working on my basement before COVID and before Biden, and I could buy a 2x4 for 98 cents, an 8-foot 2x4. It went up to, $2, $5, $6 for a 2x4 for a while. It was really
luxury
ridiculous.
2x4s.
That's right.
Luxury.
Those are college-educated 2x4s, right, Mark?
Yeah. I mean, it went through the ceiling. So construction costs, including the cost of labor and the materials, I think that has caused builders not to want to build a small home, because even if you build what would be considered a starter home size house, you still have to charge outrageous amounts for it because of the cost of the construction of it. So they went to building larger houses, 4-bedroom, 3-bath, 3-car garage houses where they could get their money out of it and make a good profit off of it still. That caused us to have a lack of inventory in housing. So labor shortages, construction costs, I think that limited supply in housing is the biggest part of it.
Does regulation also play a role in this, just slow walking the whole process, especially states like California and New York?
Yeah.
I would imagine that's quite an impact too.
That's a good call, Sam, because there are places where zoning has really cause problems. And you know where another problem we're going to start seeing, if we haven't already, is when people are taking houses and they're doing them right, they're remodeling or something, all the zoning laws are coming in to where, like if you change your cabinets in the kitchen, you have to get all these permits for electrical and stuff. You have to upgrade your electrical box, and you got to use all these new things. And I mean, it's just ridiculous just to do, just to remodel a kitchen or a room. It could cost you tens of thousands of dollars in electrical and things like that because of upgrading instead of just being able to replace the cabinets, So
you really don't own your home in a way because you're not allowed to improve it.
So those zoning restrictions are causing a lot of problems. I happen to know a handful of people who flip homes and are accumulating homes themselves to rent. And I got to say that I'm not so sure they're getting all the permits and doing all the upgrades they need to be doing according to the laws, because if they did, they'd never make their money back.
They just said, don't tell on us, Mark.
That's right.
Well, they didn't even assume they definitely didn't think I'd say it over the air.
Right. That's right. Well, Mark, we just got this question in the chat. And Sam, I know it was one that you were wondering too. Will REITs be affected in any type of way, from these potential, home regulations?
Yeah, I don't think so. REITs generally aren't in single family. REITs are usually in multifamily and multi-units and stuff like that. So I don't see the REITs being affected by this at all.
Interesting.
Quite frankly.
Interesting. Well, folks, listen.
It's such a small part of the REIT, and it's usually the really small REITs that would be doing that.
Absolutely. I'm sure, folks, we have some audience members who have gotten into real estate investing. If you've got a question about that, give us a call today, 610-363-1110. Hey, quickly here, guys. Sam, we did see online Christmas shopping hit some records, but unfortunately, there was no Santa Claus rally this year. Santa apparently didn't come to Wall Street, did he, Sam?
No, he didn't at all. You're right. Christmas shopping hit $258 billion, although there's kind of a mixed bag there because more people are also borrowing to buy. But as far as the Santa Claus rally go, Santa was a no-show. Maybe everyone was just naughty on Wall Street this year. Between Christmas Eve and Monday's close, the S&P 500 was down 0.11%. Some people are now nervous about that. Investopedia says people are worried about Santa's absence, as well as the 2026 S&P targets. They're forecasting relatively small annual gains. And then some some people are just completely losing their minds. Investopedia, quote, Santa's absence in certain years, such as 2000 and 2008, turned out to be a harbinger of doom, of course, forecasting, or rather they followed the crashes in those years. So what do you think, Mark? Is Santa a harbinger of doom? Is this Krampus, not Santa?
You got coal this year, didn't you?
Well, I'll just use high pressure and turn it into a diamond, you know?
So you want to, we're still talking about Christmas. You know, the Santa rally. I think that we follow the math on this. 2 years out of 100 years does not make a rule. That's the bottom line on it. This is just myth, and Santa Rally is such it rolls off your tongue. It's one of those things that people like, you know, like sell in May or go away. You know, there's all these things out there, but it's just a myth. It's not a big deal. It really doesn't affect anything. There is no such thing, and we've seen great rallies after a no Santa rally.
There's no such thing as Santa, Mark? Oh my gosh.
Did I just ruin it for the kids at FISM? I hope not. Stay with us. We want to answer your questions, and we want you to join us as we talk about silver.
Every day, kids all across America are coming to school with some kind of hidden pain.
I've seen kids come in who are just so confused about what's right and what's wrong, just having no idea that God loves them. And this just breaks my heart. Crossroads has the opportunity to bring the Word of God right into the public school, to reach children right where they are.
And when we see that happen, we see God changing lives.
We want to see kids not only come to Christ, but pursue a lifelong relationship with Him. And so local churches are uniquely positioned to disciple those children as they become young adults and through their lifespan.
Crossroads comes alongside a church and provides that church with a club structure, curriculum, training, and ongoing coaching for them to run these outreaches in public schools.
If you are burdened for the children of America, consider making a donation to Crossroads Kids Club. For more information, visit reachourschools.com. That's reachourschools.com.
Growing up, my dad taught me so much. In everything we do, we have an opportunity to bring God glory. It's why I connected with Financial Issues Stewardship Ministries. I wanted to glorify God in how I manage and invest my money. I'm gifting a Financial Issues partnership to my son so he can honor God in everything he does, including how he invests.
For more information on how you can gift a partnership, go to financialissues.org/gift.
My baby was like this big, and I saw his heart beating on the screen. I went from, I don't want this baby, to talking to my child on the screen. That sonogram changed my life. I went from just Candace to Mom.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
Folks, pick up the phone, dial 610-363-1110. Hope you'll join us for today's conference call as well. 3 p.m. Eastern Time, 2 p.m. Central, 1 p.m. Mountain, 12 p.m. Pacific Time. And call in right now at the show, 610-363-1110. Today's show brought to you in part by our friends at Samaritan Ministries. You can check them out at samaritanministries.org. Mark, a question for you here. What exactly is going on with precious metals, particularly silver? Silver's been everywhere as of late, it seems like.
What's going on is we're making money with it. No,
Well, I'll tell you what, I've been really enjoying the silver play that we've had on the website. But anyway, go ahead.
Yeah, no, it has been going crazy. In the last year, the price of silver has just skyrocketed over 150%, which is crazy to see that's happening. And what's been interesting from this side of the screen is with the research we've been doing and stuff, we're seeing analysts out there, really respectable analysts, just going over the top with all these extreme things that the silver market's going to collapse, and it's going to cause all of a banking collapse, and it's going to cause all these different things. We see that we see technology talking about there isn't we have 5 years of supply needed right now. We have physical ETFs that are hoarding it. We have countries hoarding it. We have Federal Reserves around the world that are hoarding it. So everybody's thinking it's almost like it's black and white and there's nothing in between. It seems like either the world's going to end because of silver or everybody's going to be billionaires because of silver. And because of that, because with all the frenzy and drama, it's hard to discern what's market manipulation or what's real, what are conspiracy theories or, what's real. So we decided to call someone who keeps a level head, has real world experience and the intelligence to help us make sense of it all. And that's the Financial Issues Ag Reporter, the one and only Craig Haugaard. Welcome to the show, Craig.
Well, my dad used to say people with level heads have drool coming out of both sides of their mouth, so I'm not sure that's a great compliment.
Somehow that sounds like a drummer joke, but I won't go there.
Mark, you did forget one qualifier for Craig. He's also quite handsome. Let's not forget
That's right. He's quite handsome as well. Well,
yeah,
Craig,
there we go.
We wanted to have you on to get your expertise in this area. I know you've been involved with silver for a long time, personally and otherwise, and with your experience in futures and commodities. I thought, who better to call on this, because it is getting crazy out there on the investment sites and all that kind of things from left to right on what's going on. Can you give us some insight or some thoughts on this?
Sure, absolutely. You're right. What's happened has been absolutely amazing. If you looked at the total silver's total market cap right now, we'd be at a little over $4 trillion, which would make it the third most valuable asset globally, just behind gold and NVIDIA. So that's kind of an idea of how much this thing has run.
We almost have to stop there, Craig, and just recap that sentence, because the third most precious item behind gold and NVIDIA. Whoever would have thought a sentence like that would be spoken? Yeah,
isn't that amazing?
It is
absolutely incredible. Yeah, there's been a few things that have gone on. Silver, has a lot of usages, mainly industrial. We in 2025, about 665 million ounces of silver are used for industrial purposes. And then when you look at all the other purposes, you came up to like 1,117 million ounces of demand for silver in 2025. And then when you look at mine production, we mined about 813 million and then got about another 197 million through recycling. So we actually had a shortfall. In other words, demand outstripped production of silver in 2025. And that was the fifth year in a row in which demand had been greater than the supply. So you can only do that for so long, and you start to have some repercussions on the market. And I think a large part of what is happening right now is finally people waking up to the fact that, we're just not producing it as fast as demand is out there. And the projections are, but for the next 5 years, you're going to continue to see this shortfall.
So that leans towards the one side who says that silver is going to continue to skyrocket and not come down. That analysis does.
It would tend to. The other thing that might add to that is that in November, the U.S. added silver to the list of critical minerals. And so the government is seeing silver differently than it did prior to November. And then on effective January 1st, actually, China also has changed the way that they view silver. They've changed it to a strategic metal, which makes it much harder to export silver out of China. And China is the number 2 mining company for silver, producer of silver in the world. So you've got kind of a perfect storm where you've had an ongoing deficit for the last 5 years. You've had the U.S. reclassify how they view silver, and then you've got the number 2 producer of silver in the world that's really not super friendly with the U.S. right now, and it's just changed the way in which they will allow silver to trade in and out of that nation. So it's kind of all come together to give us a very aggressive market here.
Yeah, and again, it seems to all support the idea that at least for a few years, we're going to see very strong silver pricing and growth in it. What about the other side, the arguments such as the major banks that have shorts that are like 10 times the amount of silver that is available coming due, and that they're going to go bankrupt, and they're going to have to take billions from the reserves and all this kind of stuff, and it's going to cause a banking issue. What do you think about that argument?
You know, I guess to be honest with you, I haven't looked that deeply into that, Mark. Would it surprise me if some banks have done some stupid things? No, probably not. But we'll have to let that.
One I read, Craig, they were talking about how, and they mentioned a bank, and then they said, but we're not going to mention its name. Then they mentioned its bank had to get $17 billion overnight to cover their shorts that they had on that. And that's what's going on there, is that, the commodities of it, they have all these shorts and stuff. But I read that and it hit me. It's like, I've never known anybody to cover precious metal shorts with actually delivering the metals. They always just paid in cash.
No, it's a cash offset. Yeah, that's obviously, as you know, the reason the markets were set up, the futures markets the way they were, so that you can settle in cash and not in physical commodity.
But this was saying there would be a collapse because of it.
No, it sounds like the bank is maybe engaging in speculation, in which case they ought to get spanked. In my opinion, that's not the job of the bank, right? It'd be like me speculating in grain instead of just trading it here for the company. It's unethical and really something they shouldn't be involved in. So,
I'm not so sure they are speculating. I think they're just being the intermediators with the hedges, and that. This article did not bring in how many longs were on it as well as the shorts. And when you settle, you're settling with the difference, not just the short, So I think there's a lot of misinformation there.
Well, what could be happening then, and I've been in these situations too, where you do have the option to actually exchange the physical commodity when you're trading futures, right? It's just very, very seldom done.
Yeah.
I have forced it a couple of times. I was in charge of a grain division that had elevators that could make physical delivery of wheat. And when I thought the wheat spreads were out of line, I sometimes put out wheat to try and push the market around, if that makes sense. But we always, at the end of the day, agreed to a price that we cashed out at.
So you just were setting the negotiation tables is what you really were doing.
Exactly. They could be squeezing them, but ultimately it should be settled with physical dollars and not physical commodity.
Yeah, that's interesting. Well, I think we're going to see more and more of this. One of the things that you brought up in an email was the gold to silver ratio. Can you talk about that a little bit?
Yeah, there's been obviously what it means is how many ounces of silver does it take to buy an ounce of gold, and it goes way back in ancient Egypt. Even the pharaohs had set that ratio at 2.5 ounces of silver to an ounce of gold. Seth, you probably won't remember this, but it's kind of more in Mark and I's time period. But in 1792, the U.S. Coinage Act established that ratio at 15 to 1. So even here in the U.S., we kind of used that ratio. Now, in 1964, we totally divorced silver from the money supply, obviously, and got away from that. But the ratio is still out there. It was in April. Let me look here real quick. May 1st of this year, we had gold. Actually, the gold-silver ratio was just a touch over 100. In other words, it took 100 ounces of silver to buy an ounce of gold. Today, we're sitting at 60. So we've seen that absolutely collapse, a 40-ounce differential since the 1st of May till today on what it would cost to buy an ounce of gold with silver. Generally, if you get that below 50, it's probably a good time to buy gold. If you get it above 80, it's probably a really good time to be buying silver, just from a pure trading strategy kind of standpoint.
Just one of those rules of thumb. Yeah, and that makes sense. It helps us to understand
what the upside might be, but it kind of helps us to look at that relationship between gold and silver and determine which one of the two would be the best investment.
Yeah, I agree. I think a lot of people are confusing the stock market with the precious metals markets, and they're not the same beast. When a stock gets over bought, overvalued. There's a good chance it will pull back, or it'll sit there for a long time until its earnings and revenues catch up to it. With gold and silver, there's different forces that cause that to go up. And one of those is the rarity of it and the need of it. And we're well surpassing the need for gold and silver right now. Even though the hoarding isn't that big of it, it is contributing to it. And as currencies become more and more fragile, we're going to see more and more of that. There's a good chance we may see the precious metals continue to rise and or stay up there for a while.
Let me throw one last thought out, Mark.
Sure, in the last 30 seconds here, please do.
In the last 5 years, we've had a shortfall of 800 million ounces. We produce roughly 800 million ounces a year in the world of silver. We've made one full year's worth of silver production disappear in the shortages of the last 5 years. And that's not the recipe for cheap prices. That would tend to indicate a longer-term strong market.
Nobody can predict the future, but it seems like things are leaning to a strong precious metal environment, and that's why we have that as a sliver of our asset allocation, so people can help utilize that, not only against inflation, but to help growth of their portfolios. We don't know. Tomorrow we might see a whole nother picture, but with the brains of Craig and the conversation we had, I would continue.
As a member of Samaritan Ministries, your monthly
make a point. No matter what happens, I'll always be there for you.
I know.
Navigating through investment objectives, risks, charges, and expenses of the investment company. This and other important information can be found in the fund's prospectus. To obtain a copy, visit timothyplan.com or call 800-846-7526. Read each prospectus carefully before investing. Investing involves risk, including the potential loss of principal.
610-363-1110. Folks, give us a call. Phone lines are wide open right now. Again, we've had a couple folks today and yesterday call in. Weren't able to get in. So give us a call now if you were one of those. Or if you just are, your interest is piqued as to what was just discussed between Mark and Craig about silver. You have more questions on it. Give us a call now, folks. 610-363-1110. And join us today for the conference call as well. Mark, I'm really looking forward to that conference call. It's going to be a good time.
I'm looking forward to it.
Absolutely.
It's always a good time. It's a great time to get together with our partners, go a little deeper than we do on the air, talk about things that maybe that impact our partners in ways that we're not able to talk about to the broad listenership.
For sure. If your interest is piqued, folks, if you're not a partner, please become one today. And if you become one before 3 p.m. Eastern time today, you can join that conference call live, or you can listen to it at your leisure afterwards. We'll have it posted later this afternoon. So join us for that today. You should have gotten an email with the information to call in. You can check it out on the conference call page on the partner side of the website as well. Mark, the markets, yesterday, the New Year rally kind of skidded a little bit. Seemed like investors sold off some of the gains from the previous 3 days. So the Dow Jones finished down almost a full percent. S&P 500 was down about a third, and the NASDAQ was the lone winner of the day, up about 1/8%. Let's get to some questions here, Mark. Interesting one coming in from Tommy. Tommy is asking, does this following announcement by Permian Resources affect its placement on the current buy list? So, Mark, I can read this announcement for you if you'd like. The announcement
please do.
So it reads as follows. Permian Resources today announced a corporate reorganization pursuant to which Permian Resources management team members and other long-term holders are exchanging their Class C shares for Class A shares. This transaction better aligns management ownership with public investors, enhances the ability to management team members to maintain peer-leading ownership, and advances Permian Resources towards the simplification of its current Up-C structure. Anything we should be concerned with there, Mark?
I don't think we should. Actually, at worst, it's a neutral. At best, it's a positive. The structure simplification. It's not a change in business fundamentals. It's aligning its ownership with public shareholders. Bottom line on it, reducing complexity. The Up-C thing, could be very confusing for a lot of people. What it really is, it's an umbrella partnership and a C corporation. What they're doing, it's the way they structured it originally. It was like a legal and tax structure, often used to when something is new, to help preserve some of the assets and stuff like that, preserve tax advantages. Well, they're simplifying it all because there is a lot of complicated filings and stuff that go with that. So I don't think there's any negative impact on the fundamentals, the cash flow, the reserves, the balance sheets. The long-term strategy remains unchanged. The buy list placement is still unaffected by this in reality. So, I kind of like what they're doing on that, actually.
Very cool, Mark. 610-363-1110. Mark, we got a call coming in. Gina is calling from South Carolina.
Well, Gina, welcome to the show. What's on your mind this morning?
Thank you so much. Actually, I'm calling about silver. I went into my portfolio and was just trying to do some updating. I admit I don't get to do that a lot yesterday. And there's a silver that's on the buy list, and I'm at work right now, so I don't have the FISM code, so I'm just going
that's okay.
say what it begins with an S. When I bought last year, I actually bought one very similar with the same name, but it was a different stock.
Okay.
Yesterday it was trading in like the $57, $58 range. And so I actually went in and bought the one that's on the buy list yesterday as well. And I'm just wondering whether I should keep the other. It appears to be the same company. I'm not positive.
Okay, well, there's a few on the buy list, a couple on the buy list. SLV is a silver, and it kind of tries to mirror the price of silver. It is not a physical silver ETF, and then there's the PSLV, I think it is, which is the Sprott physical silver. Two different types of fund. One actually holds the silver, that's the Sprott silver one, and the other one just uses futures and commodities. You know, they just mirror the price through contracts instead. So you might want to look into both of those if you're going to be buying more. I personally lean towards the physical silver and right now it actually is doing better as far as you would think something that just uses contracts and doesn't have to pay for the storage and the transportation of silver bullion would do better because of just the internal expenses of it. But we have a little difference going on there, and I like the physical anyway. I'd rather be buying into something that was physical, and in case the commodity markets get crazy, I don't have to worry about that because it's all backed by the physical. Does that help?
It does. I think I've got both of those.
Yeah, so well, good. And there's nothing wrong with that. I think that's actually a good idea.
Okay.
So praise God.
I just wanted to make sure.
But I
had one, but I had the other. So
okay, but I do want to give you a little warning. Even though we had Craig on just a little while ago talking about silver, and we're talking about how it looks strong and how it may stay up there for a while, we can't predict the future. And I have seen things like this happen to where the markets were manipulated, and we didn't get to that today. I was going to ask Craig about that. Silver manipulation, how much of this is silver manipulation, like a big bubble we saw before. But they could be enough manipulation to cause a major pullback. Nobody knows though. So I'm holding my line on it and staying firm with a small sliver in every portfolio is not a bad idea. So Gina, I think you're on the right track as long as you're not too overweighted in it.
Oh, no, it's just a teeny tiny bit because I just put my toes in a little bit at a time.
That's perfect, Gina.
All righty.
Just mix up some of those letters there.
God
it's a
bless
sliver of silver. Sliver of silver.
There you go. That's right.
Say that before the show every day,
That's
Seth.
right.
You won't get tongue tied.
Then I'll really do a good job talking on the show, right? Gina, thanks for the call. God bless you. Mark, let's get to Deborah. Deborah's calling from Idaho.
Hi, Deborah. Welcome to the show. What's going on? What's your question?
Good morning. Thank you for taking my call. My question is, I'm retired right now, so I cannot contribute into my traditional IRA account or my Roth IRA account. So I was wondering, should I transfer over from my traditional IRA account to my Roth and pay the taxes now so when I need it in the future, I don't have to be paying any taxes?
Well, you're thinking like a financial planner, and that's good. No, you really are. I think that's excellent. You're thinking like that. The way to determine that is, are your taxes going to be higher in the future or now? That's what some people say. But the reality is, is your income going to be constricted more now or in the future? You say you're retired. So maybe your incomes come down and it's a good time to do that conversion. I suggest doing it as early as you can if it makes sense from a tax perspective, meaning that you don't have a lot of income coming in. Just because you're retired doesn't mean you don't have income. And so you want to be careful about that. But yeah, I think it's a great idea. The sooner the better to convert a traditional IRA to a Roth, and then down the road, you don't have to worry about taking your RMDs, and you can take it out as you need it. And when you take it out, there's no tax involved. I love the idea. Bottom line.
Oh, great.
Just be careful about your current taxes.
Well, that's the thing. I made sure I transferred just enough to where it keeps me in the 12% bracket.
There you go.
I didn't want to go over into the 22% bracket.
And then if life throws you a curve like it has me, and you go back to work after you're retired, you might be very glad you did it now, because you won't be able to do it then. Good thinking, very good thinking.
Thank you so much. You have a blessed day.
Thank you. God bless.
You too, Deborah. God bless. Folks, got some lines open. 610-363-1110. Again, 610-363-1110. You know, Mark, when I gave the market update here, I failed to announce what the market's actually doing right now. So it looks like everything has opened slightly negative. The Dow Jones is basically flatlined. The S&P 500 is down about 0.25%. And the tech-heavy NASDAQ down about 0.75% as the markets open this morning. 610-363-1110. Boy, Mark, I'd love to squeeze in a question here. Maybe we could get Gary, 71. He's asking, will there be any new energy stocks on the buy list anytime soon, Mark? Gary has most of them on the current list.
Yeah, good question. And of course, we're going to be finding new, especially with what's happened over the last 3 months with Venezuela and all that. We're going to see some midstream stocks come on, I believe, as their earnings and the revenues go up. We'll see some of the larger energy companies come on, as even though their debt's been real high with the new resources they're going to have, it could push them into a buy. So I think we're going to be seeing some good observation there.
Awesome. 610-363-1110. Menda, we'll get to you. Saw that you called yesterday. We're getting you on the other side of this break. And the rest of you, if you want to call in, now's a good time to do it. We'll still get to you if you call right now. 610-363-1110. We'll be right back.
My name is Reagan Gardner, and I am in the 4th grade. Last year, I wanted to be like everybody else. I thought I had to act different, look different, and be different to be cool. When I joined Crossroads, I learned that God loves me just the way that I am.
Help reach more kids like Reagan with the hope of the gospel. To learn more about Crossroads Kids Club and how you can get involved, visit reachourschools.com.
In the last 10 to 15 years being in ministry, being married, something that has been constant in our lives is Samaritan Ministries. As we've moved, we've had babies, we've had different things come up, we have just been able to rely on Samaritan in ways that we never really even thought about before becoming members.
Our heart's desire is to plant roots and be in a place for a really long time. It's how we were raised. We see the benefits of that, but we also see the open-handedness of being used by the Lord wherever He calls, because we just assumed when we started pursuing church planting, the quickest way to get from point A to point B is a straight line. And with the Lord, sometimes you find out it looks a lot more like this. And yet, Samaritan was with us through the entire thing.
We didn't have to look into, we have to change insurances now because we've moved states or whatever the case may be. And it's just been a real blessing to us in different phases of life.
I'm Kyle.
I'm Colleen.
We're the Gen X.
And we're Samaritan members.
Preborn is making motherhood possible for thousands of moms across America.
I found out that I was pregnant. My family, they were like, no, you're not having this baby. I met Miss Linda. She offered to get me an ultrasound. That's where I very first heard the heartbeat. It was really a great thing that I was led to the choice to keep him.
To find out how you can support the life-saving mission of Preborn, go to preborn.com/FISM.
The opinions and recommendations expressed on this program do not necessarily represent the opinions of the station or any of the program sponsors. Additionally, all products or services offered by the program sponsors may not be known by the program.
610-363-1110. We appreciate you all so much. Appreciate the partners out there and just regular listeners. It's an honor to get to do this every day. Consider becoming a partner if you're not one yet. You can do that at financialissues.org. Mark, let's get to Menda. Menda's calling from Georgia.
That sounds good. Hi, Menda. Good morning and welcome to the show. I think you have a question about silver is what I'm reading here.
I do.
Menda, Mark is a mind reader. Did you know? No, I'm just kidding. We have your information in the call queue here.
Ooh, scary.
Sorry. Go ahead, Menda.
So I have some in the depository. It's well known, I think, UTMA, Alpine Gold, and they have a program that where they lease your metals out, and so I wonder what you think about that. It made me think about fractional money that the banks do. You know, why would you lease out?
The velocity of money, yeah, where they, and banks do a lot of that. It's very similar. It's also very similar to what you can do at a brokerage firm where you can lend them your portfolio, your stocks in your portfolio that they use and that they use as leverage for contracts and things like that. And then they pay you a small sum on them for buying it. So it's not a bad idea. You know, when you buy and deposit silver in a vault, you own it, but the depository then often through a bullion bank, they will lease that silver to a third party if you allow it. And the borrowers use it for whatever reason, industrial demand, trading, or short selling. But you get a lease rate on that, so you make a little money while it sits there. And then when you want your bullion, they're still responsible for giving it back to you. So it's kind of instead of the physical metals isn't really just sitting idle in the vault anymore. You're making a little leasing on it. So it's one of those ways. It's like sometimes during the summer, it used to be the summer stock market would slow down, and we do some options, you know, covered calls. We'd sell some covered calls to make a little income for our clients when I had my advisory on the stocks that they owned. So it's kind of like that. You're making a little, not exactly like that, but it's a way to make a little money on the silver while it's just sitting there, bottom line.
Okay. All right. Makes me feel better about that. Thank you so much, Mark. I really appreciate it.
But they need your permission to do that, okay?
Yes. They're asking now, so that's why I asked you. All right. Thank you. You're so full of information, but I know it's from God. I give God the glory. I always give God the glory.
Well, you wouldn't believe how many books and how many websites and all this stuff I keep open just to answer these questions and make sure I don't get it wrong. So God has supplied the knowledge and the ability to look up the things I need to look up as well, because it's hard to juggle everything. For example, there was a question earlier about something, an HSA or something that Seth and I was talking about. It's like, I haven't touched HSA information in a long time. I think I'm going to have to dig in to make sure I get the right answer for this individual. So it's fun. It keeps us on top of things, and we appreciate the opportunity to be able to serve you like this. God bless you, and thank you for being a partner.
Amen. Mark, that was a royally good segue, because that HSA question is the next one we have lined up. So
is it really?
It is. So Todd, who's 64, is asking, hey, Mark, would you be able to share your thoughts on how to best take advantage of the new HSA contribution feature that's available in some qualified 2026 marketplace health insurance plans? What do you think?
Yeah, that was a question that confused me a little bit, because when I did look it up, I didn't see a whole lot of difference outside of it's more available now. The HSAs are more available to the ACA type of insurance plans that are out there. So that was the only big difference. The investment, your ability to invest, it hasn't changed. I think there's like $100 more you can put into it than you could before, but there hasn't been a lot of changes in it. So I'm not exactly sure what he's going for, unless he's saying maybe, because the HSAs have all sorts of ways to utilize them. For example, you get I think they call it a triple tax advantage if you use it to reimburse yourself for your out-of-pocket expenses for health things. Now, if you don't use it for that and you just pay them out of pocket, you could defer it to the future to when you retire, and then you could take it out like a normal IRA. So it's one way to, if you really don't need the tax savings today, or it's not that tight, your HSA isn't there to the point where you're covering for a catastrophic type of insurance policy where you're paying, $10, $20, $100,000 out of pocket before the insurance comes in. If you don't need it for that, if your insurance is normal and it's just, pocket change for the majority of it, then you could just leave it for the future. There's all sorts of ways you could do this. But the one thing that you really want to be sure you do is treat this like any other investment account that God has entrusted you the revenues to put in there for. And that's to honor him with what you're doing it. You need to be strict BRI on it so that you honor God, you utilize his resources for his purposes. One of those purposes is to care for you and your family. And then you honor him with the way you invest those. That's the bottom line on what to do with it, just like you would in an individual account, an IRA, a Roth IRA, a 401k, or any other account.
That's great, Mark. Really good stuff. 610-363-1110. You probably, folks, if you want to call in, you're going to have to call in right now to get on today's show. Do want to say one more reminder. We do have a conference call later today. You don't want to miss it, folks. 3 p.m. Eastern time, 2 p.m. Central, 1 p.m. Mountain, 12 p.m. Pacific time. Mark, we got a question on our voicemail machine from Karina. By the way, folks, if you call into our show after hours, you'll get a voicemail and you can leave us a message and then we can try to answer it on the show. But just a reminder that if you're trying to call in on the show and you want to talk to us live, we're on live every day, Monday to Friday, 9:05 Eastern time to 10 o'clock Eastern time. But if you call in after hours, we'll get questions like this one, Mark. So she said, I'm 38 years old. My question would be, how do you address Social Security fraud? And how badly can it impact future identity or benefits that you're hoping to seek later on? Hope to hear from you guys soon. What do you think, Mark?
It's actually a good question, especially with the baby boomers being the bell curve that has now past the center of the huge bell curve retiring. Social Security fraud has gone through the ceiling. But most of that Social Security fraud is identity theft, not claims theft or not, Social Security claim theft. So like any fraud, the first thing you got to do is report it immediately. Get a hold of Social Security Administration. If you don't already have your own Social Security account set it up, get a hold of Social Security Administration, let them know what this fraud that you found is happening. It's very important. The faster you get to it, the less of a problem it can cause. I don't think it will, I haven't ever heard or seen yet. It doesn't mean it hasn't happened, but it doesn't automatically reduce or cancel your future Social Security benefits, this fraud. But it can cause a delay in benefits. We've seen that before. It could complicate earnings records. Actually, I had identity theft happen to me at one time, and the IRS and I had to talk about a few tax returns that got confused because of the identity theft, and it's taken years upon years to get that straightened out. And so it can cause identity theft because of Social Security number thefts and stuff like that, can cause a lot of serious inconvenience. A lot of administrative confusion is the way I would say it, but not permanent loss. So I would... here's some steps that I would take. First, if you believe there's any sort of Social Security fraud or any fraud, immediately contact the agency or the company that's involved in, including, like recently, my wife had fraud on her credit card. There was some people who, I guess, going to a restaurant on one of our travels, somebody at the restaurant took her credit card number and started buying stuff on her credit card somehow. We had to report that immediately. They reimbursed us. It really went real quick because we got on top of it right away. So regularly review your Social Security's earning record. If you don't have already, create and secure that My Social Security account. It's called My Social Security account. Create it so you can review it, make sure they got all the right information. If you have to, use credit freezes and identity monitoring when you come up with this fraud to make sure that your credit cards don't get taken advantage of and your bank accounts don't get emptied. But the bottom line is act quickly. Time matters more than anything else. I hope that helped. I hope that helped with the question there, because that is a huge thing. Fraud today is going through the ceiling more than ever. We're seeing it on the internet. You got to be very careful on the internet. There's a lot of these things out there that ask you, they play games with you and say, what's your favorite color? What was your first car? And they do all this, and they get all this information. And then they steal your name and your identity. You don't want that to happen. The one thing they can't steal is your salvation and your peace in Christ. We do what we can do. We honor God with all he's given us. And I'm so grateful that you've honored God with your investments by investing with biblical integrity. And I'm so glad you were here with your question today. And I look forward to seeing you all real soon. God bless everyone.
If we ever forget that we're one nation under God, then we will be a nation gone under.
Thank you for joining us. This has been an FISM production.